Finally, U.S. CFTC Commissioner Christy Goldsmith Romero saying greater interconnections between the crypto industry and traditional finance echoes the risks of the 2008 financial crisis. Commissioner Romero adding that CFTC oversight would be an answer to potential financial stability risks brewing in the industry. And joining us now is none other than CFTC Commissioner Christy Goldsmith Romero. Welcome, Commissioner. Good afternoon. So great to have you on the show. You know, crypto and today's financial landscape is something that you say echoes the environment that triggered the 2008 financial crisis. Maybe you could parse that out for us.
Yeah, thank you. It's really nice to be here, and I appreciate getting an opportunity to talk about this. So I was the Special Inspector General over the TARP bailout program for a decade, and as you know, Bitcoin originally started, or at least was heavily influenced, in part based off of the bailouts and the frustration with the traditional financial system. And so the idea was it was supposed to break from the traditional financial system, but we're seeing, and we just saw particularly what started with Terra and Luna, just some of the same kind of traditional financial stability risks, some of which that echo what we saw in 2008, which was this idea of you have unregulated and underregulated products, it's opaque, there is some contagion risk and some run risk. And we saw that with Terra, USD, and then what happened with Luna. And then just the broad sell-off that happened and how it impacted and led to contagion to lenders and liquidity drying up. So we're really kind of looking at those financial stability risks, along with some novel risks that crypto poses, and sort of thinking about how do we address those financial stability risks as we go forward.
Right. And the CFTC was created by Congress in 1975 to oversee the U.S. derivatives market, which includes commodity futures, options, swaps markets, and OTC markets. But let's play devil's advocate, because some would ask, why would the committee that oversees crops, meat, dairy, and wood regulate digital assets?
Yeah, so I appreciate that. So what we regulate is commodities. The derivatives off of commodities. And so right after the financial crisis, it was very clear that there were financial instruments as certain asset classes that fell under the definition of commodity. So just first and foremost, Bitcoin is a commodity. And so we regulate the futures off of Bitcoin. So we have actively Bitcoin futures trading right now on CFTC regulated exchanges. And then there can be another group of different commodities, basically, that are not securities. And so to the extent that they're a derivative, they may trade on one of our exchanges. The other thing we have is we have anti-fraud, anti-manipulation authority over the spot market. And so we brought, for example, an enforcement action against Tether related to misrepresentations about their ability to be stable. That's just one. Brought another one against BitMEX related to anti-money laundering and know your customer control. So we can continue to do that, but obviously there's really what we say to be a regulatory gap in that there is no one regulator, market regulator over Bitcoin or other commodity digital assets that are not securities.
Mm-hmm. And yet crypto and Bitcoin is different from traditional products. It's a new technology with features like decentralization and the pseudonymity of it. So are either incompatible with regulations as they currently exist right now that have not contemplated these kind of new technologies and innovations?
I really appreciate that question, because I think that's the right question to ask as we go forward. I think the approach that needs to be taken is the same risk, same regulatory outcome. So we first look at risk, and that's in part why I'm trying to identify risk, both the traditional financial system risk that might also apply here in crypto, but also the novel risks like the pseudo-anonymity, the cyber hacks, those types of risks. And so once we identify the risk, I do think we really look at it to say, well, what's the same regulatory outcome? How do we normally address those risks? And then we look to our existing framework, which we know has worked, and we really try to say, can we fit it within that? I think we have to be a little careful about going to bespoke treatment because we don't really know the consequences of doing so. So we really have to kind of look at what has worked and say, can that apply? If that cannot apply, then we can look to address it in some way that has the same regulatory outcome. But I don't think there will be a different regulatory outcome.
Mm-hmm. Meanwhile, there are a number of legislative bills in Congress that are being explored, such as the Digital Commodity Exchange Act, the Lummis and Gillibrand bill, and the Digital Commodities Consumer Protection Act. A lot of them, they confer a lot more power to the CFTC. So I wonder if the CFTC has a plan for providing clarity to crypto spot markets in lieu of congressional action or SEC guidance in the meantime.
Yeah, I think that's another good question to ask. So what we're trying to do right now is provide some clarity by making these decisions on different crypto companies that are coming before us on the derivative side and coming in to be a regulated entity. And as we set out the standards that will apply to that, that sort of gives them an idea of what it's like to be regulated. And then if we get additional authority on the spot market side, like the Bitcoin coin itself, we would look to apply something similar. So there's some basic kind of foundational financial stability guardrails, market integrity guardrails, and customer protections that we will look to apply. I think the way that Congress is doing it, at least with the most recent bill put up by Senators Stabenow, Bozeman, and others, tries to address a framework that is very, very similar to the existing CFTC framework now. And so that gives me some comfort. I give all respect to Congress that they will do what they're going to do, and that's a separate branch of government. But you know, it's good to be able to see something that looks like what we're used to seeing and how we know how to regulate it.
Commissioner, do you think the CFTC would consider a list or criteria for crypto companies or issuers to point to? Is it an issue urgent enough to consider? Because right now, if they're relying on Howey tests, I mean, they're spending six-figure legal bills just trying to figure it out. And a lot of them don't have the money to do that.
Yeah, so I mean, I think on this question of whether something's a security or whether something's a commodity, you know, we look at it as to whether something is a commodity. And for a commodity, it's pretty broad definition. So it's basically anything you can put a futures contract on, except for movie tickets and onions. So there's going to be a lot of things that are a commodity. I think obviously our fellow market regulator, the SEC, where I worked, is going to be applying the Howey tests and the security side. I think the best thing that can happen is some clarity from Congress. I think that's helpful. And in the absence of that, I think we'll continue to work well with the SEC, just as we do now as it relates to swaps. We do the similar kind of thing on swaps as to what falls under the SEC and what falls under the CFTC.
All right. Unfortunately, we've got to wrap it up, but I have so many more questions, but great hearing your insights. Just, last 30 seconds, CFTC Chair Rossen Bedham said Bitcoin could double in price under CFTC regulation. Do you agree?
I don't make predictions on that. I'm just trying to make sure that the market is safe and strong and liquid, and that's my job.